All right, can you hear?
I can hear.
All right. Thank you so much for joining us today. And this is Michael Chu of 7M Realty. I have a good friend who is a lender, and we also happen to be in the same mastermind group. And so I asked her to join us and give us a little bit of feedback and her views on the lending process for buyers. And specifically, I would be asking what are I'm a realtor, so from my standpoint, when I talk to buyers, I would always say in the lending process, you need three things out. One is your budget, so you don't waste time on looking all over it and things that you don't qualify for. And then the two other pieces are required for submitting offer, namely the pre-approval letter and proof of funds. So with that, I'm going to start asking a question to Debbie. And Debbi Galvan is from Empire Home Loans, and she's a very senior lender. And I'll let her say hi, and I'll go on and ask questions.
Hi, I'm Debbi Galvan with Empire Home Loans, and I'm actually a mortgage broker, which means that I have about 50 different investors that we can take loans to. So it gives a lot more options for all of buyers, in all different price ranges and FICO scores and everything. So I'm able to serve a much wider span of clients.
All right. So thank you for that intro. And for our viewers in the process of looking for homes, if they had lenders to start with, of course, that's fine. If they have not had lenders, when would you recommend them start engaging with lenders? And what are some of the criterias for selecting lenders?
Your lender is really going to be the one with all the numbers. So I would say engage in that process early on, even if it's 6 months to 9 months before you're ready to buy, and you're just trying to figure out how much money do we really need to put down. Michael, you and I have always heard one of the biggest myths is that people need 20% down. So you don't need that much, and you may be able to buy sooner than you actually think. That's why I think it's important to talk to your lender first. As far as which lender to choose from, it's definitely somebody that you're going to be very comfortable with. They're going to walk you through the mortgage process. They're going to take you through the contract to all the way to the closing of the escrow. So you want someone that you can communicate easily with. If you're not super sensitive or nervous, that's a different kind of mortgage loan officer than maybe if you are. So just definitely somebody. Everybody has different personalities, so reach out to the one I think that would best serve your personality.
I actually got a question from a buyer one time. They were asking the difference between mortgage banker, like in a big bank, getting that loan from them, versus some other people who they didn't know what they were, but obviously it's a mortgage broker. So, what's the difference between a mortgage broker and mortgage banker?
So there's actually three different kind of lenders. The mortgage banker is divided into like the big banks, like a Bank of America, Wells Fargo, some of those types of lenders versus a small community bank or a, small mortgage banker. And then you have the mortgage brokers. So the mortgage broker is the most different of them all because we actually send out your file to be underwritten and funded and serviced by another, by a mortgage investor. The mortgage bankers tend to keep everything in-house, which, after the mortgage crash, we were all kind of forced that way. So I have a wide variety of experience. I've always gone back to the mortgage brokering just because you have so many options. I can choose different investors based on who has the best interest rate. On this side, I have found that I'm able to close escrows much sooner. I'm able to get my appraisals in much sooner. And oftentimes they compete on rate. So it's really good, I think, for the buyers that they have me shopping for them for the best alternative.
Yeah, I've oftentimes had my impression working with both is mortgage brokers are always more flexible. The hours are different. They work kind of realtor hour rather than banker's hour. And when I request for something, it's always a lot easier for mortgage broker to help out, comply, during weekend hours and all that. So it's my feeling is mortgage broker is almost
Right.
like an entrepreneur, small business people and mortgage bankers. I mean, they're kind of like bank employees. That was my
Yeah. The
feeling.
big banks, the Bank of America's, Wells Fargo, all of them, oftentimes they're not even able to text through their personal cell phones and not able to talk through their personal cell phones. So that's much more of like a banking relationship
Hmm.
versus a small mortgage lender, like banker versus a broker. Those are people, that are me. So a couple years ago, I was with a small mortgage bank and I was still me. I was just only representing that one investor. So I found as the turn times, got slower, early 2020,
Hmm.
right? Everybody got so busy. I was stuck with that one investor and their turn times. Where in 2021, I went back to brokering. And at that point, I was able to choose from many different investors. So somebody may be 20 days in underwriting, somebody else may be in 5. So I was able to really choose what was best for the buyers and the borrowers.
All right, thanks for that piece. And so let me ask about the thing that we're kind of interested in. What does the whole process kind of entail? And I've had buyers also asking me like, "Oh, will this lender like ding my credit in the process? How does that work?" And so for these three pieces of output, like how much time does it take, and what does the buyer have to come up with to go through that process?
Okay. So I'm going to speak for myself and in general, try and speak to them both. So most of the time when I do a pre-approval and I just start working with a buyer, I'm interested in giving them numbers. I want to give them realistic numbers. So I like to get all of their income documents in first so I can pretty much say what I think they're going to be pre-approved for. Because I don't want to tell somebody, oh, sure, you're going to get 700,000 if it's really 300,000 or a million and it's really 6. So it's just, I like to see their income so I can ballpark it. For me personally, and I always share this with the clients, I only run a soft inquiry in the beginning because I want to go back to the buyer and make sure that they're happy with the numbers that I'm giving them. That when we're talking cash to close and we're talking monthly mortgage payments, that's something that they realistically feel like they want to move forward on. And then at that point, we're just doing a matter of if they're happy with that, then I just run credit and then run the desktop underwriter. So I tend to be, once I get the paperwork back from people, I tend to be like between 1 and 2 days to
Mm.
get them fully pre-approved. So depending on, if you have 20 applications on your desk, it might take a little bit longer. But there again, you want to work with somebody that's communicating and that can help you kind of be able to navigate of what's important to each client. Some clients may have a house that they want to make an offer on that weekend and it's Thursday. So then I need to prioritize that. So it just depends on where we're at within that process.
Okay, so is it possible? So once all the paperwork that they need to provide you are in, let's say a couple more days, business days, you will be able to turn around all three. Is it is there a time lag in between the budget number versus the pre-approval and proof of funds, or are they all always being done at the same time?
So I like to always ask for the W-2s, pay stubs, bank statements up front so that I can kind of put that puzzle piece together for them. And then, but oftentimes people will give me their checking account, which doesn't have much money in it, but then there's a savings account on the side. So that's just a conversation we'll have. Once we go through the rough numbers, I've looked at everything and then I talk to them about the numbers. If they say, okay, I'm ready, I want to write an offer, it's literally a couple hours maybe to do the full credit report and then the desktop underwriter to make sure that we can get them approved. So that's the desktop underwriter. It's Fannie Mae's version
Mhm.
of the approval that we have to run. Most underwriters will underwrite to those findings.
Okay, so some of the other questions buyers may have, it's kind of like, oh, I'm a first-time home buyer. Are there any like, I mean, in the start, you kind of mentioned that you don't really need 20% down payment,
Right.
but what are some of the options that these new buyers may be able to, let's say, take advantage of or tap into?
So that's going to depend market to market. The state of California does have some down payment assistance programs that are amazing,
Hmm.
but it has to be 80% under the Bay Area, under that area's median income. So that's gonna typically your first time home buyers that are not making up to what everybody else is making may have some options for down payment assistance. And typically getting into your home the first time is the hardest part. So if they don't qualify for down payment assistance, because I do find that a lot of times people make too much money to
Mm.
qualify, then we can go in. If you're a first time home buyers, you may be able to come in with, on an FHA loan, you could do 3.5% down. On a conventional loan, you can do 3 or 5% down, depending on your loan amount. So we can get you in with some pretty low down payments. You will have mortgage insurance, but like I said, I have a lot of different investors, and one of my investors has the lowest mortgage insurance rates I've ever seen.
Mm.
It's amazing. Yeah.
So one of the other thing is the so for buyers when they are looking at these various options, um, so in the beginning we kind of talked to the fact that the banks don't really have like multiple programs. So this is another advantage that
Yes.
working with you,
Mhm.
y- if one thing doesn't work, there's always other things to consider. And then I have also a lot of folks that are like, especially in tech working world, we have a lot of immigrants, and immigrant families usually have this like parents who are just like,
Mhm.
eagerly helping kids and stuff. For those buyers, like, what are the rules related to like gift money and how long preparation time, like seasoning, does it require?
Well, gift money is as simple as a gift letter and a copy of the parent's checking or savings account of where the money's coming from. It's that simple. We don't report anything to the IRS, so that's just given to the lender.
Hmm,
So they can gift them. They'll have to talk to their CPA. I need to probably be careful on that, but they'll talk to their CPA if there's any gift tax. But most of the time, parents can give kids money and just they're going to sign a gift letter, and then they will provide proof that they have the money to give.
I see.
So that's
Is
very
there
simple.
like a cap on that at all?
No,
So the
no, that's
rules
where
have
you want to
probably
talk to your
changed a
CPA.
little
I'm
bit.
sure there's something on tax side that may come up. We don't report anything, but they want to talk to their financial
Okay.
people on that. Yeah.
All right, that's good to know. I thought there were like rules of cap and how much time seasoning. Maybe that was the old rule at some
Yeah,
point.
yeah. No, there is a rule about having money. Like if you put money in your bank account that we cannot source, which means we cannot prove where it came from, then we have to have it seasoned in there for 2 months. So they
Ah,
want to see two months of bank statements without seeing that large deposit. So we're only always going to take the last 2 months of the two most recent bank statements. So as long as we don't see a large deposit on there that we can't source, then we're fine.
okay. So great to know. So next time, if I have any buyers I want to send to your way and say, hey, can you help them come up with a budget number? You'll still do the whole thing, but help them return that number so we can hone in on a specific market segment, right?
Exactly, exactly. I do what I call a numbers talk with them. So
Hmm.
I have them get all their documents to me, and then I sit down with them and I show them the estimated fee sheet, and we go through what all my estimates are, what the lender costs are, what the mortgage monthly house payment would look like, and what the estimated cash to close is. My question to them at all times is, how does that payment make you feel? How does that cash to close make you feel? And that's really the budget part you're talking about. We qualify people off of the gross income, which is before you have your taxes taken out, before you have any daycare costs, before you pay for gas, all of those things. So I may be able to qualify you a lot higher than what you're comfortable paying.
Mm.
So that's why I always ask people, where are you comfortable, so that we can make the number work for them, because that's the number. You don't want to be up, you know, nervous about your house payment, you want to be very comfortable. And that's really where I love that you're asking about a budget, because that's where that comes in.
Yeah, actually, from my standpoint, in the end result of that, like how much payment and stuff, I'm thinking, I'm gonna talk to a realtor, I mean, to buyers about the other side, which is,
Mhm.
government is actually helping you paying some parts of it. I'm no CPA, but from my own personal experience in buying homes, right? You have tax deduction on the interest that you are paying, and now the other side, I'm not entirely certain what part of the point is deductible. That part I'm a little bit confused, but
What
I know
part of
the
what?
interest part is
Yeah,
like closing costs or points. There are certain parts of it that's deductible, certain part that's not. I'm not
yeah.
so clear on that one, but
It's only the things that are deductible, again, check with your CPA, but the things that are deductible is only the discount point to buy down your rate. So that's
uh,
basically like a prepaid interest rate. So if you decide to pay down your rate to get a lower interest rate on your mortgage, that would be deductible because it would be listed as a discount point, not an
yeah.
origination fee, as a discount point. That's when they can deduct that. And it's generally goes different between each CPA, but whether they take it all in 1 year or finance it over the 30 years, that's up to the CPA.
That kind of spurs another questions for me. But so we talked about like seller might be able to help finance something for a buyer, and one way to do that is to help buyer buy down the points.
Mhm.
So in a transaction, maybe this is a accounting question. I don't know. Maybe this is a CPA question. I was actually thinking about the case where the seller helps pay down the points for, let's say, 2 years, whatever, however long.
Mhm.
And that buy down, you mentioned that could be deductible. So
Two
does
cents
that
of the
count?
thing. Yeah, so the way that that looks on the closing disclosure or the final settlement statement is it's gonna show up as a discount fee that was actually paid, and then it'll show up as a seller credit. So the discount fee that's in your line item up there is what can be deducted. So
Uh,
even if your seller gives you a credit to help you pay for some of the closing costs, that won't reduce your discount fee that you decided to pay to lower your interest cost. So
so
they
it
still
really
will
is.
actually deduct that.
Okay, so it's on the closing statement, whatever that's on the buyer side, not on the seller side.
Exactly,
I
exactly.
see. Okay,
Yeah, yeah.
that's kind of
Now, when they buy a house, they can deduct the interest rate, and this really, go talk to your CPA on this, but you're gonna be able to deduct your interest portion of your mortgage payment up to a mortgage, I believe, of $750,000. So you do get to write off a portion of your mortgage interest each year, and then also a portion of your property taxes. Now, in states like ours in California, with what we pay in California state taxes and property taxes, sometimes we go over, but sometimes a portion of that can be written off.
I, you know, I don't know about anybody else, but whatever shows up on my property tax bill, everything goes in.
Yeah,
So, but
exactly,
hey, that's
exactly,
just me.
exactly. We try whatever we can do.
Yeah. So anyway, I want to thank you so much. I kind of ran out of questions already, but I'm sure a discussion like this will help out buyers, and just getting to talk to a lender, maybe like yourself,
Yeah,
quickly and come up to that point of like, oh, we know exactly what we are
right.
capable or able to afford.
Right. And I
Um,
think when you're talking to your lender, if it were me, I would want to know what's my payment, what's my cash to close, what does all that cash to close come from? What am I paying for? And what's the process? What's the lending process? So that you go into it feeling educated and you're working with a lender really that's gonna help you along the way. There's a lot to know, a lot to learn. But that's my passion, is helping people get into homes. So I love it. And I believe you want to work with a lender like that.
Right. So I think, just to kind of close this off, both Debbie and myself were in this coaching program. And the reason we're there is because we wanted to serve people better rather than just, hey, transaction based and, you're just my path to my commission. So I think we are both passionate about helping people. So buyers, when you come in, you are actually, kind of seeing part of the team. I will be a realtor will be the guidance or the advisor in helping through the transaction, but there's various parts of the team members, and so the finance team is actually one of the most critical, and then there's a whole lot of other people we work with in closing the transaction and getting buyers the home. But the important thing is, I think we all need to be human. We need to have that connection and help the buyers achieve what they wanted to do in their life.
Yes, I agree. I
All
agree.
right. All right. Thank you so much, Debbie. I will
Thanks for
talk to you.
having me. It was an
Yeah.
honor to be here.
All right. Thank you very much. We'll conclude this right now. Bye.